CEO Elon Musk sending an email to Tesla employees yesterday saying, quote, "Don't be too bothered by stock market craziness." And guys, we know it has been stock market craziness for this name. It's shed almost a third of its value, at least before yesterday and that rally we saw just in a week, given the fact that you have not only all the technical stuff that's going on within the broader market and where this name is concerned and issues around valuation, but also some of the fundamental focus, too, with things like production and waning demand and higher interest rates in focus.
Easy for Musk to say, right? Don't be bothered by the stock market craziness, though he obviously has seen better days in terms of how his own holdings have fared. Certainly sold a lot. Adam Jonas today, probably the best known named analyst who follows this stock, defending it somewhat today, even though he cuts the price target, Mike, down to, what, 250 from 330. He still says this D rating has created an opportunity, so he's still defending it.
Absolutely defending it, saying that it's a broader EV issue. For the first time he's expecting since the COVID crisis next year, supply is going to exceed demand for EVs globally. That's a tough situation for any company with this kind of valuation, although he says that Tesla's advantages, inherent technological advantages and all the rest are going to have it consolidate its market share and its leadership. Now, what's interesting to me about that call, well, first of all, about what Musk said, it's just your typical CEO speak, right? Telling employees just focus on what you can control, do what's right for the business, and the stock price will take care of itself. But it comes 2 months after Musk said he expects Tesla at some point to exceed the valuation of Apple and Aramco combined, which means $4 trillion. You're under $400 billion right now, 350-ish or so. Tesla is now less than 1% of the S&P. It's fallen toward the 20th spot. So in other words, it's the correct message, but the craziness also happened on the upside. And we should remember, Musk also over the years has said he's going to essentially go after the shorts and they're going to have a problem. But he's also at times said the stock price is too high. So what are we listening to? What's the message?
It's interesting.
It's a reaction to the last quote. That's all it is.
It's interesting that you talk about the message, but what about the messenger? And yes, it's typical CEO speak, and you've heard a lot of other CEOs say the same thing when their stocks have fallen. But some would argue that the messenger is as responsible for a big portion of the stock drop as anybody is. So I wonder what the employees who are not supposed to be bothered by the stock market craziness actually think.
Well, the flip side of that is you could say the messenger has been responsible for the gangbusters gains we saw through the pandemic, for example, and even before that, even before Tesla, which now, mind you, is sitting on something like $20 billion cash pile, even before it became profitable, even when it was more speculative that so many names, particularly on the resale side, piled in because of Elon Musk. So I think it's probably one of those swords that cuts both ways. I don't know that we're talking about it enough. The fact that oil has come off. And yes, it's still trading at elevated levels, but whether there is a correlation between not just Tesla, but also the other EV names, and kind of going back to Jonas's notes, in terms of demand and this idea that EV supply is now exceeding EV demand, because when you do see energy prices and gasoline prices start to come off a little bit more again, and when you see things like electricity outages and power outages in the midst of, brutal winter storms like we've seen in the past week, I would imagine that it, too, is going to dent EV demand and what consumers are willing to pay for those types of vehicles.
There's no doubt that's true. On the other hand, the entire story, the halo effect over Tesla for so long was its demand is insatiable at these levels, and therefore all we have to do is get supply up to where it can somehow eat into the inherent demand out there. That is true, though. They're talking about weekly deliveries in China, half of what was expected, like 8,000 vehicles versus 15,000 or something like that. That's in Jonas's notes. So clearly there's a hiccup just going on because of what's happening in China. It's not the whole story. The final point on the Morgan Stanley note, on Adam Jonas's note, is what he does to take the price target down for the non-auto parts of Tesla. Because to me, that was always the most contentious thing. This pie-in-the-sky idea that it was going to be valued as a network software company, as a mobility company, as a separate product that you were going to value separately. If you look at what he did to the valuation implicitly, is he basically cut by half the non-auto components of the price target. So he said, actually, the market's not going to pay up for this mobility product. as a standalone, not going to capitalize it at as high a level. And similarly with this network communications thing. So I feel like you were stretching to get a price target high enough to stay really bullish at one point. And now it's like, well, the car company's worth 140.